Hi friends, welcome back. So a lot of red in the market today, and I can tell you growth scare, recession scare, job scare, and biggest of all, we had Nvidia scare. They're down almost 10%. You also have Apple down, Google down, Meta down, Amazon down, Tesla down, Microsoft down. They're all down. And I want to start with this news regarding Nvidia. Guys, I told you not to sleep on this story. I know we had Nvidia earnings call, and if you follow my channel, I mentioned it. I said, hey, they didn't mention this earnings call because they can't. It's an ongoing investigation. Analysts aren't going to ask questions about it. The CEO is not going to bring it up, but we have some more details. This is breaking news now. Nvidia gets DOJ subpoena and escalating antitrust probe. Here's the basic gist of it. Subpoenas are going out to Nvidia and a bunch of other companies, so the DOJ is getting a lay of the land. The FTC and the DOJ have been definitely cracking down lately on monopolies, and I'm a big fan of Lena Khan over at the FTC. I've talked about this several times, and the fundamental question is the way Nvidia does their practices to their customers. Are they locking customers into their ecosystem the way that things are designed? So we're going to see. I mean, that's what the question is. And I'll just say like something like, for example, in the Apple case, they're facing strict regulations in Europe. So like their iMessage, how that's designed, does that lock you into their system? Does it make it easier to communicate with each other and then kick out Android, that kind of thing? So with Nvidia, when you buy an Nvidia, are you locked into their software, and you can't really replace their chips with another chip because they're not compatible, that kind of stuff. Basically monopoly practices. And tech has done this for years, this kind of stuff. For anyone in the community, if your company or you yourself, buy NVIDIA chips at this server level, please let me know your thoughts on this stuff if you think NVIDIA is a monopoly or not. I would love to hear that. Also, we're facing seasonal pressure, right? So September tends to be a bad month for stocks. Take a look at the last 5 years as the S&P 500. In September, stocks have gone down about 4.2%. So again, this tends to be the weakest time for stocks. Wall Street comes back from Labor Day. They survey the land. You know what? I'm just gonna go cash. I'm just gonna de-risk. And also this particular year, we have a crazy election year, and you guys know this. Politics in the USA has been crazy lately, and it's hard to predict who's going to win. Honestly, it is. I'll give it a 50-50 right now. We track the election. I don't talk about the election all day, every day, but you can't avoid it. We're like, I think 60 days away. Let's get this election season over with and hopefully move on from it. But you can't ignore it. This is a seasonally weak time. And again, the average is 4.2% down in September. Now, that's the last 5 years. And now this is actually a really interesting one. If you guys follow, TV, stuff like that, this guy's always on TV. This is Tom Lee. He is a perma bull. So he basically tells you all day, every day that stocks only go up except for today. So Tom Lee, he's saying, hey, stocks could fall 7% or more. That is very unusual for him. And as a side note, Tom Lee went to my school. I don't know him personally, but I think he's a very entertaining guy because he says stocks only go up except for today. So that's why it's unusual. And essentially worried about job scare. We're worried about recession. I mentioned before. Take a look at this. This is job growth where it's been lately. So this, change in payrolls, you can see the blue line, or the blue bars, I should say, right? And essentially it's been slowing. The one of the problems that you have though, because you got these huge change in payrolls back in 2021, is that you were comparing the bottom of the pandemic, then like this massive rebound in 2021. So the comparables aren't going to be favorable, right? You guys see what I'm saying when you look at these kind of charts? I want to bring that up, but you can see it here, right? The downward trend, that's the red line, which is a 3-month average. You can see that job growth is slowing. The other issue as well, and I mentioned this so many times on the channel, even if you're working, right? Even if you're working, the job that you have may not keep up with the cost of housing, the cost of food, these kind of things. Essentially, the average American is struggling, and I mention it, guys, all the time, because like if you talk about hey, Apple's come up with new products and they're gonna make tons of money because Apple always makes money. It's just like, well, you need people to buy said products, right? So you have people in the USA that like they can't even retire, right? Normally on schedule, they're gonna have to keep working. Let alone, why are they gonna buy $1,000 phone? And so one of the things that I think is important when you look at companies and earnings reports and what they're saying, are they producing products that people can afford to buy and that they want to buy and that they need to buy, right? And then I always point this kind of stuff out as well. Don't sleep on what's going on in China. They're having still the real estate problems over there. A lot of Chinese people, their wealth is tied into real estate. And so when they see their wealth decreasing, the last thing they want to be doing is like, hey, I'm going to go shopping, right? they sort of like hunker down and play it safe. The other thing is too, are we going into recession or not? So this has been a, how can I say, a crazy issue on Wall Street, and I always feel like this will, and I'll tell you guys when they're being dishonest or honest, but I always feel like, you know, much of what you see in the news or from Wall Street has been a little bit dishonest. Basically, every time we have like these crazy Fed rate cuts, chances are there's a recession, right? The basic gist of it is that if the Fed is cutting deep, right, they're worried about, again, jobs, they're worried about growth, and they're like, oh my God, we better cut to get things going again and start printing that money. The problem though is that we're still fighting inflation. We're not down to that 2% that we've talked about. And the issue is, I mean, guys, it's tough. I trust me, I'm just saying this is a tough issue. The issue is that if you don't control inflation, it hurts people at the bottom most, right? But also in turn, if you don't have the growth there, then the people at the bottom also don't have jobs. I you know, don't want to make any jokes about this. I want to be sensitive about this stuff because I just said I know it's very, very real. And you have this weird disconnect about what, you know, people on Wall Street say and think, or say some of these YouTubers say and think. They never mention this kind of stuff because why? They may have a bunch of assets in their hands. So what do I mean by that? Read this. How do you feel about the economy? It depends on whether you own stocks. Okay. So for many people out there who don't have a lot of stocks, right, they're struggling, right? That's just the way that it is. And, you know, they feel like they can't get ahead. And yet there's people out there that, you know, hey, what are you guys talking about economy? My stocks are going to the moon. I mean, look at I'm in, you know, Nvidia, it's just stacking up, and oh my God, look at all this money I have. What do you mean AI is going to be the push forever? And you know, you see these people like talking about this, and there's like this massive disconnect because I see the articles, I see that more and more Americans have, you know, multiple jobs. Like I can see right here in the data. I see people can't retire, and I know there is a disconnect. Basically, what it is it all depends on your point of view, is if you have stocks or not, right? So if you have stocks, then you feel like that your wealth has been growing, you feel more comfortable. If you don't, it's just the opposite. You're not seeing that. And then the issue that I pose to you is that, okay, if stocks crash, then you start to have people, we call this like the wealth effect. Then you have people more at the top of the spectrum. They start slowing their spending because they don't feel like they have the assets that they once did. And then you get even more problems, right? What we've been seeing recently, though, is that we know people at the bottom are struggling. And again, you got to mention this stuff because it relates to the overall economy and the overall market. But the people at the bottom is struggling. It's tough, guys, right? You're running out of savings. You are, you know, you got to go to the grocery store. Everything's too expensive, so you start throwing stuff on credit cards. Interest rates are high right now, so you're really, really struggling. And then people at the top, when they slow down, they start, you know, trading down. So they start, you know, sort of cutting back on their spending. And instead of going to, you know, say Bloomingdale's or whatever department store, maybe they start going to more Macy's, maybe they start going to more Walmarts. We've talked about this stuff before on the channel, but I just want to mention, like, your outlook often depends on, you know, what your job situation is, what your asset situation is. And, you know, regardless of what any national numbers say, it always depends on your individual experience in your neck of the woods. So I always try to emphasize this stuff. And again, the economy is not necessarily the same as the market, and you want to track both. Here's a good example, guys, of something that people don't talk about enough. Homeowners, right? If and you, I'm sure you guys know this. We talked about this before with people say moving to Texas, which is kind of a fun topic that was, you know, we talked about that about 3 or 4 days ago, where if you end up buying a house in Texas, I'm just mentioning Texas because it was a whole thing, you know, someone followed Elon Musk out there to Texas and they experienced, oh my God, homeowners insurance are through the roof. Oh my God, you know, HOA fees are really, really high. In fact, we talked about with, there was a member of the community that was saying, yeah, they had a house in Texas and like property taxes are like through the roof. And with their HOA, you know, added together, I think they said they're paying like $9,000 a year on a $400,000 house, which is quite a lot actually. And I mention this stuff because just the cost to live is higher, right? And so if you feel like that your job is uncertain, and then you see like this crazy cost just to live, just to buy food, just to, you know, maintain your residence, it creates a lot of pressure, and people essentially, your consumer sentiment goes down because you're worried about the future. And if you're not, you know, going to be spending, companies aren't going to be making profit. Or for example, if you're a company, and just going back to the main chart here, if you're a company and you're worried about the future too, you're not going to be hiring. Like, all of these things are all connected, and a lot of it has to do with, you know, people's projections for the future. The other thing too I want to mention is here, you get these kind of stories every now and then. And this is essentially a couple. And they were saying, we are, I think they're like 55 or something like that. And they talk about their individual situation. And when you get these kind of stories, it reflects kind of what's happening in the market. And I want to read this one to you guys. It says here, I am 80 years old. My husband is 72. We have about 200,000. We took it out an account because our advisor put all our money in mutual funds, and only person making money was our broker. We lost 2,000 in my husband's IRA after it had been open for 5 years. I fired him and put the money in CDs. We lived on Social Security. Our cars are paid off. We have no debt, and our mobile home in a 55 plus park is paid off. But the lot rent is $14.50 per month. We live pretty comfortable on this budget. We did all of our traveling in prior years, so it's not on our bucket list. And then they talk about, they have their medical taken care of. But the point being is that, there's a lot of people out there that are on fixed incomes, or, regardless of your job, your math seems to work out, right? The budget seems to work. But if you get this crazy increase, be it your food, be it your fuel, or anything, right? Inflation, suddenly the math doesn't work anymore because your income isn't keeping up with costs. This is a typical thing that you'll see. And here's another example for people who want to get into homes. You guys know this. The price of homes just keeps going up and up and up and up and up. Moreover, you also have this. Rents. Headline, apartment construction is slowing and investors are betting on higher rents. This is something that we probably need to do. It's a really, really complicated issue, but I'll just make it really simple. We need to build more affordable housing for people, right? There's just not enough affordable stuff out there. We probably need more multifamily things. The issue, though, with, say, the multifamily one is that depending on the city that you live in, there's a lot of people out there that basically vote it down all the time and say, fine, build multifamily, just not in my backyard. And then you get this problem of which we just don't have enough affordable places for people to live. So there's a lot of this stuff going on. And, guys, I try to tell you guys all this stuff. I know it gets to be really complicated talking about, what's going on with jobs, economy, recession watch, what's going on with the Fed. But the more, hopefully you watch the channel, we'll sort of navigate together, and none of this stuff will be shocking to you anymore. The same way that I was saying, guys, we talked about this before in the Nvidia earnings call. Watch out for this. It's coming. And the more you know about the world, the less sort of, the less surprised you're going to be about stuff. So here's another example. Warren Buffett continues to sell stock. You can see it right here. Bank of America has been selling. He's been selling Apple before, like he sold like half his stake, and now he's really cutting Bank of America. And these are his biggest holdings. So he's just sitting on piles of cash. That's how he feels about the market. And you also have this. This is an interesting one. Goldman Sachs. They came out with some projections regarding the election. I'll read the headline here. Goldman sees U.S. GDP hit if Trump wins, boost if Democrats sweep. Now, I'll just say this. You guys vote whoever you like and don't necessarily base your voting just on what Goldman says. I've also heard reports coming from where I went to school, Penn. They were saying, hey guys, regardless if Trump wins or if Harris wins, inflation is still going to be a problem because neither are addressing that. So that's why I mentioned the jobs, inflation, that kind of stuff. And now we're talking about what's going on with GDP growth. Let's see the estimates. This is coming from Goldman Sachs. It's actually really quite interesting going into the election. It says here, we estimate that if Trump wins in a sweep or divided government, and it essentially means, if Trump wins, will the Republicans control, all of Congress, or they will be split between the House and Senate, right? So they say it doesn't matter either way, sweep or divided government. The hit to growth from tariffs, that's what Trump's proposing, and tighter immigration policy would outweigh the positive fiscal impulse, right? And also you got the tax cuts, Goldman. So that's what Goldman's saying. Gross domestic product, again, this is under Trump. Gross domestic product would see a peak hit of 0.5 percentage point in the second half of the next year in that scenario, with the effect abating in 2026. The Goldman team estimate they assumed a 2020 percentage point hike in China tariffs under Trump, along with higher duties on auto imports from Mexico and the European Union. You also have this here. This is coming from an estimate of the Harris side. If she wins, should Vice President Kamala Harris win the Democratic secure both Chamber of Congress, new spending and expanding middle-class tax cuts would slightly more than offset lower investment due to higher corporate tax rates. Then it says here, a very slight boost to GDP growth on average over 2025 to 2026. And then essentially, guys, you're looking at, yes, they may have more GDP growth with Harris, but as I mentioned before, you may have inflation with either presidential candidate. The one thing I always say with any of these kind of things, don't get too caught up in this stuff. Focus on your life and don't expect either politician to come save you. It just, you got to count yourself. How do you do that? Make sure you always have job skills that are needed in this marketplace. Always be upgrading your job skills. Make sure you have good relationships at work so that you got your feelers out there at all the times, because if there is indeed a growth scare, companies are going to tighten back on their hiring. You may have more layoffs, unfortunately. And also too, you want to be prepared financially, right? So make sure you're paying off your debt. Make sure you're socking away enough cash to where you're going to be okay. Me, myself, in terms of like the stocks, we tend to be more conservative this time. I see what Warren Buffett doing. He's cash, right? He's sticking with the safer stocks, be it your dividend stocks, right? The ones that are like your stalwart companies. Not the crazy time to be going into crazy growth. I just see this stuff happening, and the worries out there. And again, if the Fed does cut, there is a chance of recession, because essentially the deep cuts mean they're trying to get growth going again. So anyway, love to hear your thoughts on any one of these stories. Always appreciate you watching, and I'll catch you all in the next video.